Hello, welcome to video training. We'll be covering General Ledger Level 2, Chapter 1, Understanding Auto Transfer. Okay, what we're going to do here is try to get you to the point where you can understand how things are actually transferring from your modules such as POTS, service, unit sales, receivables, payables, into General Ledger. We're going to start off with the main three modules: POTS, returns, service, and a unit sale. So quickly, we'll go in for demonstration purposes and create a pot sale. Now I'm going extremely fast here because you're not interested in learning about pots, you're interested in learning about General Ledger. So we're going to just go in and key in some pots. It happens to be a Yamaha pot. Let's look up some pots on the fiche. Make things easy. So now we have our fiche program. We're going to grab a bunch of these pots and let's put them on the invoice. Okay, so now we have $52 worth of pots. They all happen to be Yamaha pots. Okay, let's look up some other pots here. What I want to do is use a couple of different manufacturers. For example, we have 100 of those in stock. Let's take 30 out. Okay, now we got a $761. So we have some Yamaha pots, we have some OMC pots. Let's go add some other pots here. We also have this vendor called AD. Let's put 14 out of inventory here. Now what we're also going to do is we'll add some freight. Okay, let's finalize this bill. Now keep in mind we have some Yamaha pots on this invoice, we have some vendor O pots, and we have some vendor A. So there's three different manufacturers on here. We also have some freight charges. We're going to cash this out. Let's just do a cash sale. We're going to take in $900. We're going to give the customer back 26. Okay, keep that in mind. Now, let's go to our service program and print out a service bill. We'll pick out any old work order. Let's pick this one here. Seems to be fine right here, 600. Okay, it looks like what we have here is a $534 service work order. It's done, obviously. Customer's going to pick it up. Let's go in here and, we're going to finalize this here, and let's bill this out. Okay, and so now we've printed our bill, and we have done a service work order. Now keep in mind the order and the way this looks obviously is all controlled by options that you have set. Okay, so we've done a POTS invoice, we've done a service invoice. Let's go in and do a major unit. Let's see what we have out here. We'll go in and let's do this John Johnson here. And it looks like, well, in this particular case, it's a boat motor or trailer. We're trading some another boat in. Let's just cash this out. We're making 26% profit, so we're going to cash this out. We're selling it today. Here's all the other stuff that we're selling along with it. Let's just say we're going to finance this here. Our finance company is GE Financial, and is our basic invoice. There's three major units on here: boat, motor, trailer, as well as we're financing it. Okay. We're also putting the trade in. Now the trade that we just traded in is now in my inventory. So everything's been done. What we did into that sequence of events was obviously we've taken product out of our inventory, sold it. We updated our receivables. GE Financial owes us that amount of money, and that is also been applied to General Ledger. Okay, so now that we've done those three things, let's go into General Ledger and see what happened. Obviously, just to show you what went on internally, in my receivable module, we have GE. Well, they owe us $28,000. We also have the customer that bought that, which was Johnson. Obviously, he doesn't owe us, but the fact that he bought it is here. So everything has been updated there as well as the other modules. Also in our sales journal system, we have all the sales that we've made, and I'll just list today, and they're listed as, is our pot sale, is our service sale, and is our major unit sale. And here's what we did total for the day. Obviously, we added 32%. Also, you've seen this here. We've done our vendor journal. I'm not going to separate it by departments, but here's what we made on the labor. Here's what we made on the boat. Here's what we made on the trailer. Here's what we made on the outboard. Here's what we made on the pods. So you've seen all this before. What we're really concentrating on is what did it do in General Ledger. Let's go to General Ledger. And we can actually go into our journal system transactions. Now, there are multiple settings in the General Ledger system. When we ship the system, it's set so that things do not automatically post to your financial statements. They post to your journals, and then you would look at them, make sure they're okay, make any corrections, and then you would actually post them to your chart of accounts. In my case, there is also an option that says whenever we do anything, put it right to my financial statements, put it right to my chart of accounts, and there's no need to do a journal posting. So those are options that you may want to consider when you talk to your GL consultant, when you call up and make that appointment so that you do talk to one of our General Ledger consultants. They will recommend probably the best way. Normally what we do is we recommend that you do it where you're looking at it first, double check it, then post it. Once you feel that you've got everything set up all right, then you can turn the automatic option on and just puts it in automatically. But just to show you what I've done, I'm going to go into my journal entries, and the journals are organized by your different modules. Obviously there's my POTS journal. So let's go in and look at my POTS journal. And I'm going to look at period 4. We happen to be on a calendar year. So my period 4 is the same as my calendar. This is my main screen there. Again, we're not going over how to use the system. We're just going over so you can understand what is going on and how things are transferred. There's this 600 and there's that entry that we just made in the POT system. Obviously it's posted. It's already in my chart of accounts. These are the entries that were actually made. So remember that pot sale. Now if we look at the entries made, basically here's my freight. Here's what I collected in sales tax. There's my undeposited cash. Now normally on sales, you usually have it set up so it goes to undeposited cash, cash register, whatever you want to call it. But at some point in time, you're going to be taking that out of your undeposited cash and you're going to be depositing it in a checking account, maybe 1 or 2 or 3 checking accounts. So normally your sales programs do not put it in directly into a checking account. It does exactly what you're really doing. It's going into a cash register. At some point in time, you're taking it out of the cash register and you're going to put it into a checking account. Now, one of the things that I wanted to point out is notice that we did, when I said that we sold some Yamaha pots and we actually sold some OMC pots, that's what that O is. What it did is it separated those particular vendors. It basically said, okay, my Yamaha sales were $49.13. There's my sales account. It reduced my inventory. The cost of those sales was exactly $25. My inventory got reduced by that. And obviously my cost of goods got debited. So it made all the appropriate debits and credits that it needed to do. It also separated my other vendor here. And then what it also does, it also has a that AD vendor. And we're going to be going over this, is when you're setting up your journals. You'll be able to set what we call overrides. Now, what an override is that you may pick certain vendors that you want to have separate sales accounts for. For example, the average manufacturer or the average dealer might be a franchise dealer for 2 or 3 brands. So on those 2 or 3 brands, he may, and some dealers do, some dealers don't, want to separate those brands. So when I'm doing a pot sale, I'm a Yamaha dealer. I want to have a separate sales account for Yamaha. I want to have a separate cost of goods account for Yamaha. These are all topics that we'll go over when you set up your consulting meeting with our GL expert. One of the things, so if you would like to do that, there again, when we set up the journals, we'll be going over how to do that. Typically what happens is if you're a franchise dealer and maybe you're a Yamaha and OMC, you would have separate sales accounts for pots for Yamaha and OMC. Anything that's not one of those would go into just the category called pots retail, just pot sales. So, that's pretty much the way, and we'll be going over how you can actually set that up. Okay, so there's my POTS invoice. There's all my debits and credits. It's all done. It's actually in my financial statement. I can run a P&L and see exactly what I've done so far. Let's go in and take a look at our service journal. Same thing. Now, I'm hitting F9 here because that's to do a lookup. And there's the service work order I just printed out, basically the same thing. Here's all my entries. It separated all my labor. It got my sales tax. I have an EPA charge that's on there. I also have some labor that was non-taxable and some labor that was taxable. I billed this out to my customer, so it went to accounts receivable. And I told it to separate my Yamaha sales, and obviously as my Yamaha sales. Okay, let's go out and look at our new unit sales. There's the sale that we just made, 29,308, and there's all my entries. Now, obviously, this here is a little bit different. We've got our sale. We also sold some insurance, service contract. Obviously, there was a trade payoff here. There was some accessories. The cost of the accessories. We actually took in a trade, and we also had. This is the Yamaha outboard motor, which we actually separated that part of it. Okay. So all we're trying to do here is just give you a basic idea of how things flow. So as you see, we did a pot sale, and it went into my financial statements. We did a service. We did a major unit. How did it do that? How did it know where to put it? How did it know what account numbers to use? How did it separate all that information? Okay. We're going to give a brief definition or a brief tell you of how it really accomplished all that. Hit escape, and let's go into maintain source and journal transfer files. This is where we're going to be going to set up our journals, where you, the customer, will tell you how you want your information to go into your financial statements. We're only going to be covering this format 1, and we're just going to show you basically how it happens, and then on the very next section we'll show you how you can set it up so you can make it happen the way you want it to. Let's go into section 1, format 1. Best thing to do here is hit next. When I did that pot sale, is what it did. It's not magic. It went out to this template and said, okay, when I do a pot sale, I am going to look at this template and I'm going to look things up and I'm going to use the numbers that you gave me here. So for example, if I have a pot sale, now it's going to go out, look at every pot on that invoice, and we're going to talk about overrides in 1 second. If it's a taxable pot, it's going to use this sales account 4700. It's going to use the cost of goods 4700. My inventory account is 1200. Now, these things are 4 separate accounts here. We have some customers that actually like to separate wholesale sales, retail sales, taxable, non-taxable, and have separate accounts for that. Most dealers don't really need to do that. You can get reports on that anytime you want. So in my case, and this is the way most dealers set it up, I have one sales account that's called POTS here. And no matter if it's taxable or non-taxable, regardless if it's a wholesale customer or retail customer, it's all going to the same account. If I wish, I can separate them. Those are your decisions. I have one cost of goods account. I have one POTS inventory account. If I have a freight, there's where my freight is. A miscellaneous charge. If you're doing core charges, my sales tax account, my customer deposit. Now keep in mind, a customer deposit is normally a liability account. When you take a customer deposit, it rings that amount, whatever you take in for a deposit, the customer paid in full. That doesn't get rung up as a sale, it gets rung up as a liability. That's what a deposit is, a liability. When that customer picks up the POTS, it will now take that out of the liability account and move it over to a sales account. Now you've rung up a sale. Also in the POTS system, you have the ability of adding labor on a POTS invoice. Well, if you do, you need to have an account number for that. Also, you've got your pay method here. There again, there are some options that you can use. This here, like cash, is normally your undeposited cash accounts. Go in the cash register. Credit card, yeah, I'm putting that also in my undeposited cash account. You could have a separate account just for cash credit card sales. Checks are normally going to go in with cash. So, whether you want to separate this or whether you do not want to separate this, that's entirely up to you. So it's not mysterious here. It actually just looked at this, looked these things up, and said, okay, here's the account number I'm going to use. Now, what about the Yamaha and the OMC? Those are two vendors that it didn't use 4700. How come? Well, there's a button over here called Override. And what this override means is that you can basically say, look, I want to separate my sales. Normally, if you don't have a software package that's as powerful as this, it usually doesn't separate stuff. You just usually see, okay, here's what I made in my parts department. In this case, you can separate, and there again, normally, some people use this, some people don't use it at all. Normally, the norm is you'd want to separate your franchise manufacturers. So if I'm an OMC and a Yamaha dealer, I'm saying anytime I sell an OMC or Yamaha pot, I don't want to have it go into just pots. I want to have it go into OMC pots, Yamaha pots. Now I'm using the same inventory account, which is pretty much normal. You're not going to usually have separate inventory accounts. There again, you can get all the information from reports. Anytime you want to go into the inventory system and say, what do I have in Yamaha? What do I have in Honda? What do I have in whatever manufacturer you want? These are taxable, these are non-taxable. If you want to separate them, fine. If not, they would be the exact same numbers. In my case, they are. So if you wanted to say, now what this does is when you sell a pot, it goes through that, the computer is going through the invoice on an individual line-by-line basis. It looks for any vendor that you have here. This is the vendor that you have in your inventory system. So this has to match up. If I wanted to separate Honda, I would type in an H. I would go over here and I would use the number that I want to use. So, I mean, you're controlling how everything works here. So now what's going to happen, it'll go through every single pot sale I make, look to see if any of the manufacturers are on this list. If they are on this list, it is going to use these numbers here. If they're not on that list, it is going to use this number right here. So it's really simple. It's not very complicated. And it's not magic. There again, you control where your things go, how you want to separate it. It's very flexible. You can separate it and have as many sales accounts as you want, as you can see. Or you can keep it simple, and some people don't separate and don't use the overrides at all. So these are options that you need to think about. And that's what we're trying to do here. We're not showing you how to set this up. We're showing you how to understand how it works. So now you can go back and think about it, talk to the owners, talk to maybe your accountant, and find out how do you want to set it up. There are many, many options. And you can set it up so you don't break it down very fine right now, maybe similar to what you've been doing. And then later on you can separate it. So these are things you may want to think about. Okay, here's my POTS journal. When you're done, we're just going to hit next here. It goes to your returns. We're not going to talk about that right quite yet. And here's my service journal. It works exactly the same thing, exactly the same way. Here's my accounts that I told it to go to. Also, it has an override also, which means, all right, if it's one of these, I don't want to use those accounts. Now, there are some decisions that you need to make there again. Do you want to use the exact same sales account when you're selling a pot from service versus a pot? You can have different ones. But keep in mind, you don't want to use your general ledger system as a report system. You can get reports that give you all this information. So when you're thinking about general ledger, don't think about, well, I want to see a report like what did I sell in pots and service. You don't want to get that from general ledger. You can get that right from your service program. You can get that right from your reports. You don't need to use your general ledger system as a reporting mechanism. What your general ledger system should be for is to be able to hand it to a bank, to be able to hand it to a manufacturer and say, here's how I'm doing, here's where I'm making my money, here's where I'm not making my money. That's what it's all about. Obviously there's going to be lots of reports that you may want to run that you don't really need to have in general ledger. So it's all pretty much simple. You have an override, you set how you want things separated, and then it goes out here. So it's pretty simple. If I'm using shop supplies, there's my account number. If I'm doing sublet, here's my account number. Here's my cost. Here's my inventory, things that have inventory that we're deducting. Same thing with the deposits. You could have one deposit account. You could have a separate deposit account for service. Sales tax. The type of the pay method. Same thing. Major units. Same exact thing. Obviously these descriptions are different. You're going to key in your numbers and you're setting it all up. It's not magic. You're controlling how it works. And what you have is you're going to have a used unit sales journal. And I'm going to go backwards here. You're going to have a new unit sales journal. You'll have a service sales journal. You'll have a returns. And you'll have a pot sales. Okay. All we're trying to do here is give you an understanding of how things flow. So as you can see, we're going to go back over here. Here's my entries that were made. Let's go in and run a financial statement. Let's go in and do a profit and loss. I am going to go in here and I'm going to type in, let's compare 2007, and we're going to do period 4, which is all we really have. We do that so you can relate to what you're looking at here. These are those sales that I just put in. Those are those 3 sales that we did. And that's all I did. We did pots, we did service, and we did a major unit. And here's my P&L, and here's everything that we've done. It's comparing it to last year. Here's my gross profit. Obviously, we don't have any expenses. We haven't done anything in expenses. So, what we want you to understand here is that, okay, we made those sales. Here's where the sales went right here. They go in your in your journal system. There's all your journals that we just looked at. Pots, service, new unit, used unit. And there again, let's go look at that one more time. I'm going to hit F9. It's posted already. And here's the entry it did. It made those entries by looking at that template. So it's relatively simple once you really understand how it works. And there again, I highly recommend, especially on General Ledger, that you make an appointment to talk to one of our GL consultants. Now, support can help you, but if you really want to get good advice and good training, support is usually just to answer questions. Make an appointment. Typically, you want to make that appointment. You don't call up and expect to talk to somebody immediately. The GL consultants usually need to get an appointment. Usually, there's a 2 or 3 day lead time for that. So, call ahead. They'll tell you the kind of things that we'll be looking for. Make that appointment so we can get you going in the right direction. Okay, hopefully this will help you have a little bit better understanding in how it works and how it's flowing. And now we'll go into the next step of how to set that up so you can make it happen the way you want. Okay, this concludes this section.